Welcome back to Nasdaq Trade Talks. I'm your producer and host, Leanne Alfaro. Joining me today for the Market Intelligence Day update is Mike Sokol, who is Managing Director over at the Market Intelligence Desk. Thank you for joining us.
Nice to be here.
So let's touch on headlines here right off the bat.
Yeah.
We know that shares sold yesterday off the concerns with trade talks with China. Could you tell us a little bit more about that?
Sure. So China is really, and China-U.S. trade talks has been moving the market along with the Fed, primarily because it's so important for the economy, for global economy. So any incremental movements there with the talks are moving stocks. Probably about 80% of the talks are baked in, if you will, because the stock market has been rallying on the hopes that by April, maybe early May, you'll get a positive outcome there. So mostly it's been positive because the market expects a positive. Anything that would delay that would just on the margin move stocks. So yesterday in the afternoon, we saw stocks move lower on a little bit of, what's probably just normal back and forth in the talks, but the market is very sensitive to it.
Mm-hmm. And then today we had a big hearing from the Fed at 2 o'clock. And you were on that call, so could you fill us in on that?
Well, yeah, and I was watching the news, but what really is going on with the Fed is that if you picture the market, it went down substantially in December, primarily because the market thought that the Fed was going to plow full steam ahead with some rate increases in the face of a weakening economy. And you can see here on the chart here, that's not the stock market, that's treasuries, and treasuries were above, that's a 10-year. That's a one-year chart of the government 10-year treasury. And going back just to November, you were above 3%. Mm-hmm. So what that chart tells me is that the treasury market and the stock market were sort of in agreement that you didn't have a lot of inflation on the horizon. And the meeting today was confirmation from the Fed of that, because they've already announced a few times that they wouldn't be as aggressive on rate hikes. What they said today was that they weren't going to do any rate hikes at all this year and only one over the next 2 years. So certainly confirmation of what the market was expecting. And in addition, they're going to pare their balance sheet down. They're going to stop doing that in September. So very dovish commentary. And as a result, the market here spiked on the S&P about 10 points right off the bat. So the market was looking for that, and they got it.
Absolutely. So as you said, on par with expectations from what we heard from the Fed. Mike, thank you so much for joining us. Really appreciate your time. And we'll see you later this week for more from the Market Intelligence Desk. Nasdaq followers, stay tuned for more updates right here from Trade Talks. See you soon.